as you know, if you have 19 beds or under, they're looking at 50% of your records, both staff and residents. And in the big places, they're looking at 10 to 12%. So we're fighting for equality on that, because that is a little upside down. If you have, 8 residents, the state health department doesn't need to be there for 12 hours. If you have 100 residents, they probably need to be there more than 12 hours. So we're fighting for equality on that. We have some great educational programs. CALA has a conference coming up. We're doing 2 half-day Zooms, the 23rd and the 29th of April. So we're trying to get some education out on that, and we do some town meetings. But if you would like to just see what CAL is about, go to the website and they'll update you. But we are going in all kinds of directions and we are making progress. Thanks.
Thanks, Janet. Appreciate it. Okay, next I would like to introduce to you Blake Crawford. I met Blake a few years ago at actually one of the CALA conferences. And Blake's he's with Assured Assisted Living, and they have about 4,000 facilities that they insure across the nation. Blake himself is responsible for 70 to 100 of those facilities. So he really knows his stuff and knows what he's doing. Blake is a native of Kansas City, so he wasn't too happy a few weeks ago, I'm assuming. Interesting thing about Blake, if you see those jerseys behind him, the number 45 is actually Blake's college basketball jersey, but that number 28 is his dad's jersey. His dad was a professional ball player for the Red Sox. So that's kind of cool. Everybody join me in a warm round of applause for Blake Crawford.
Yay, Blake! Let's see if I can do this now. Thank you very much, Vern, for that warm introduction. Let me share the screen. And yeah, thanks for all of that. I appreciate it. So my dad did play for the Red Sox and the Royals. Being a Kansas City native, I'm more of a Royals fan than the Red Sox, but he did have more success with the Red Sox because the Royals tend to stink. All right, let's see if I can get this going correctly. All right, is that screen shared correctly? Can everybody see it?
Looks good.
All right, perfect. Well, thanks again, Vern, for letting me speak here. I appreciate it. A big thing for me to do here, and my goal is to a few things: educate, teach, support, help, all that kind of stuff. So I want to talk a little bit about where we are in the insurance marketplace, what's causing your premiums to go up pretty much every single year. What got us here, what the pandemic's done to that, and then, some ways that I help my clients save money, stay insured correctly, protect them, and just, again, educate them. A big thing I really like to do is sit down with my folks and go through the policies and say, hey, here's any gaps you might see, here's where you're protected, here's where you might look at some additional coverages. But just kind of walk through the policy so they know what's in it. You'd be surprised how many folks I talk to that have never talked actually in depth with their insurance broker about anything. They just wholeheartedly trust that everything is the way it should be, but more than often it's not. And with all the different nuances within senior living and all the issues that we go through, it's tough to find a great policy. So I just urge you all to be attentive when looking at those and talking to your brokers. But we'll get started and go through some of that. So, all right, there we go. So first, I just wanted to talk a little bit about Assured Partners Senior Living, who we are. Not to brag, even though I am very proud of us as a company, but more just to build some credibility around our information and who we are and what we do. So as Vern mentioned, we insure about 4,000 facilities across the US. That's about 350 different operators. And that ranges from your big boxes. We've got clients that own and operate 30 to 40 nursing homes over, 12 states, to I've got clients that have, 1 8-bed facility. So it's across the board, and really just as industry experts, understanding, what that means for each of the different clients. And, you're going to insure a SNF much more differently than you're going to do a residential assisted living. So just understanding what goes into that, but being subject matter experts within that arena. All of our resources are in-house. So that means our claims management team is all built off of previous administrators, previous paralegals within the senior living marketplace, previous carriers. So a lot of underwriters that come from your CNAs, your MMICs, those carriers who are writing your policies now sit on our team as well. So that's been a huge benefit to us. National coverage, we have offices in pretty much every major state. I think we're up to like 45. Once we get an office in Hawaii, I'll be the first to raise my hands to go out there. But right now it's mostly just the mainland places. And then active involvement in a lot of the national and trade associations, organizations, places like CALA, places like RALNA, CHCA, AHCA, American Healthcare Association. So across the nation, we tend to be very involved in these just as industry experts and stay close to the news and what's going on. Close ties to our carriers, understand who they are, the underwriters, have those relationships. I feel like my relationships with my underwriters are as important as anything else I do. I see it as how you all want to be transparent and have those relationships with your families of the residents. Being that communication and having those lines open is always very important between the broker and the carrier. We've got a lot of industry experience. Some have been doing it since I've been about born. My boss who runs the vertical has been doing it for a long time, and he actually has created a bunch of programs and carrier programs for insurance. So he's been doing it a long time. Headquartered in Florida, but like I said, offices most throughout the US. And just again, to reiterate some of the agenda, I won't go over in too much detail, but state of the market, where we were pre-COVID, what COVID's done, then overviews on some of your major policies that you'll see that you're pretty much required to have, and then some additional policies just to see gaps where you might be needing coverage, some best practices, and then kind of looking forward to where we're going. And then we'll have some time for some Q&A after. I talk very fast, so hopefully you all can understand me and comprehend everything. But so we'll start with pre-pandemic. So this was a couple years ago when everything was bright and shiny and birds were chirping, people were hugging. Insurance was still bad in senior living. It's always been tough. We were in a hard market, in a very, very hardening market. Rates were rising, capacity restrictions. So carriers were decreasing their interest in writing, larger policies, more terms. A big thing for us is looking for broad terms because the coverage is going to be better and more insurability for our clients. And now we're seeing more modified terms, conditions. This is all even pre-COVID. This was happening. There was a lot of carriers that were getting out of the markets, not just on the liability side, but the property side as well. So and that's based off of, a lot of different issues that carriers are seeing. We'll talk about that too. And so what caused those issues and where we're at now? So catastrophes. So as you see property rates increase for your property policies, that deals a lot with the natural catastrophes. So even though we're in Colorado, we're a big wind hail state. So we see a lot of hailstorms come through. That's going to make those roofs and those damages go up. So that makes the rates go up. But even with, insurance companies like Liberty Mutual is one I use a lot for my facilities, my residential facilities. They're a national company. So just because they're writing here, they're also writing in other states that have hurricanes, wildfires, out in the mountains and things like that, or California. So they're taking those losses as well. So just because we're not having as many losses here due to that, doesn't matter. They're still going to increase the rates across the board just because those losses are happening across the nation. I know we got some folks from Texas here. So all of those issues with the freezing and stuff they've had the last few weeks, things that they're not used to, ton of losses. I've talked to a bunch of our partners and groups down to Texas, and they're just claim on claim on claim. So it's very, very bad right now, and it's going to make things even get worse just across the board. increased frequency of high severity of losses. So this is a number of things. So just the bullseyes that you all have on your backs for litigation, and some good thing is Colorado is not a very highly litigious state, where there are a ton of other ones that are much higher. You'll go drive around and see billboards of folks that are just targeting, is your loved one in a nursing home, is your loved one in an assisted living facility? If so, and there's been an incident, call me. And it's just terrible. It's terrible because there are some people that are in it for, and don't take the best precautions and approach to the industry, but there are a lot of very, very amazing people I've got to meet and work with that I just love and are in it for the right reasons and doing the right things, and to still have those issues is just terrible. So again, a lot of why we do this is to protect folks like that and come to their defense when we have those issues. And then the pandemic has just totally put I guess just there was already that big bonfire burning of the insurance, and then just adding gasoline and everything to it. It's been tough. There's increased, and we've only seen the tip of the iceberg as far as the claims go. It's going to increase as things come out. The East, where they were hit first, New York, places like that, we have everyone's seen the issues in New York City with the nursing home and hiding the deaths and everything. And so we're just seeing the beginning of litigation, the complaints that are coming out that will eventually turn to litigation. It's going to happen. It's going to go on. But the good thing is there's things that are happening to help resolve some of that. A lot of states have COVID immunity bills that have passed. Colorado does not as of now. We're fighting to get that in place. And then at a federal level, it's also being talked about and handled. So I do believe that before, hopefully the end of the year, there will be a national immunity for litigation based off of suits revolving from COVID, not criminal, but just civil suits. So I think that will happen. But even with that going on, I think there will still be a ton of cases. And so with that, we'll kind of dig into a little bit about specifics with COVID and what it's done right now and what you all can expect kind of going forward with that. With the liability, it's a GLPL, that's general liability and professional liability. Appetite restrictions. So again, a ton of carriers that have typically written policies for years and years and years are no longer doing it. They're exiting the market. It's just, being much more down to a few carriers, and then, a few admitted carriers, and then most of it on the E&S side. Pandemic exclusions, you're going to see if you're on, so excess and surplus lines, there's admitted paper and there's surplus lines paper. Predominantly residential assisted living is on surplus lines paper, which they can change year after year. So they can add pandemic exclusions and COVID exclusions to those policies. And so it prohibits you from creating a claim based off of a loss due to COVID or something with the pandemic. It will not be covered. Capacity restrictions are worsening. So it's, again, just the amount of coverages that you can get, things that are covered within policies are tightening. It's harder to find really those great policies for liability. And then vaccinations for residents, that's actually should be on the work comp side I got up there, but I'll talk about on the work comp. Work comp, and an issue with that is vaccinations for employees. They're mandating that, and some places are mandating that. It's hard to mandate just based off of religious and personal beliefs. As an employee or employer, it's something you can get into some litigation if you do end up mandating it. But if you feel comfortable with your employees and you have those relationships, then I have had clients that have done it that have not had any issues. But you are increasing your opportunities for litigation if you have mandated those. But work comp carriers are covering those costs, which are making those rates rise as well based off of increased losses. Virus contraction. So, if an employee contracts the virus from work, I know it's really hard to trace that, but if there was an outbreak and folks got it, and then all of that would fall under work comp as well for those lost wages or those doctor bills, things like that. So all of those losses are creating a work comp to go up. property. So property originally was the big one is business interruption. So that's any loss that directly as a result to your property. So it's usually property damage. So it's hail, something that has caused, if you've had hail that makes mold, that creates the necessity to move your residents out of a certain part of your home. That would be a business interruption loss because your business is interrupted by a specific loss to your property. A lot of people initially thought COVID shut down some facilities, decreased capacity, decreased your residents. So, if you have a 12-bed facility, but you're at 6 residents just because people were moving them out to stay safe, people were looking at that as, all right, well, this is this COVID, this pandemic, this virus has interrupted my business, and so we're going to look to cover it there. It's really hard because typically you have a pandemic exclusion or you have some kind of virus exclusion on a property policy. And it also doesn't point specifically to a loss on your property policy. So there's not that one event of, hey, there's a hailstorm on June 6th, 2019 that caused this loss. It's really hard to point that with the pandemic, but there actually has been a lot. Zurich is under litigation right now or a battle to actually cover a COVID loss based off of business interruption. My brother's an attorney in Kansas City, and he represents Jack Stack Barbecue. If you're ever in Kansas City, amazing barbecue, check it out. It's good stuff. Any barbecue in Kansas City is amazing. But they're a restaurant. They lost a bunch of business because of COVID, and they sued their carrier because their carrier wouldn't cover business interruption for that issue there. And the courts found them it is a valid argument. And so now I think it's going to the next level, which I'm not sure what it is, but they're winning that battle right now. So I think more and more it's depending on the forms, how broad they are. If they are not very specific and too vague, carriers are going to have to start coughing up some money to cover those. Next is management liability. So this is your employment practices liability, your directors and officers, things like that. So especially with employment practices liability, issues with your employees having an issue with, if they contracted COVID at the facility and saying that there weren't proper precautions taking place, the PPE wasn't there, there wasn't correct processes, procedures in place, and that's why I contracted the virus, and that's why I got sick. So I'm going to sue my employer because of unsafe work environment. That would fall under employment practices. So that's been having a definitely bigger impact than we've seen based off of just strictly COVID. And you can see a couple of graphs there. Some things in my way, but these are issues. So these are responses from carriers, from brokers, things like that, of what has been responded or what have insureds looked at for coverage, or what has it impacted the most. And so you'll see business interruption as that was people's first go-to for coverage based off of COVID losses, work comp, employment practices, you can kind of see there, but definitely BIs, that is typically the biggest issue is it impacted the business, it impacted revenue. So that's what they're going to go after. And then this is, have the following been impacted by COVID-19? So again, availability of coverage with carriers getting out of space, hard to find coverage. So those issues will stay there and we'll be there for a while. Pricing's gone up as claims go up, as lawsuits go up, as those price tags on lawsuits go up. Pricing for your policies will go up because it's more of what the carriers are paying for. Underwriting trends, again, the way they're seeing in underwriting accounts, with what they're looking for. We'll get into that more in a little bit, but how better protect you, how we can, sell your story to the underwriters and paint that picture as their underwriting trends are being a lot more tightened. Somehow I lost that. Renewals are being more and more poor. If it's cancellations, it's non-renewals. If it's just way increased renewals, all of the above there. Accuracy for exposure data. Again, it's tough really early right now, but tough to really nail down their exposure data of your facilities and things like that. So, and then again, carriers' ability to collect premium. So it's businesses that have really, really struggled right now with COVID. I've got multiple clients that just with their, bed count being way down for residents and their ability to pay bills, it's tough for you all. So it's sometimes, insurance is one of the last things you got to pay. You got to keep the lights on. You got to keep the residents safe and protected. And, insurance kind of falls there. So it's something that carriers have had a hard time collecting. So now we'll dig into specifically some general liability and professional liability. So this isn't necessarily looking right at COVID, but this is just generally, what to look for in some of these forms, what I look for when I look at either my policies I'm putting in place. If I have a prospect I'm looking at, what I'll go through and see if it's in there, things like gaps, just overall, I've seen some policies for general liability and professional liability that don't even cover professional liability. It's just a generic GL form for an assisted living residence. So it's just insuring the place like a house, which is not correct. So really look at this and pay attention to what's in the forms. Typically with a assisted living form, you'll see a combined form. So you'll see a lot of times GL and PL covered on the same form. Sometimes they'll be separated, but a lot of times they'll be similar. So again, look at specific policy forms, look and see what's actually covered. Hopefully it's both. But again, I have seen just GL covered if the carrier's not, or if the broker doesn't really know what they're insuring and putting in place. And so GLPL, and so SAM is sexual abuse and molestation. Prefer broad terms. Again, you want to have, if you can have broad terms, not nailed down to specifics, because then the carrier can combat and fight. It's like, hey, we had this specifically in here, but if it's broader, you're having a better shot of getting that claim covered and getting that loss taken care of. And then, if they can throw in some terms like addition or higher non-owned autos, HNOA. So, if you are driving your residents around, if your caregivers are driving residents around, if your caregivers are driving around from place to place, you should have some higher non-owned auto, just as that is as an issue with Colorado and how the weather gets them here sometimes. Accidents happen. So you want to make sure you're driving safely. A lot of times it'll be picked up on their personal, but especially if they're driving residents or it's a serious accident, you want to have some coverage there. A lot of forms will include that, but some won't. Cyber is another one that you'll see some tech coverage somewhat. So I know cyber is like not a big issue, but it is because it's especially for as you get larger. It's not just you're like, hey, I got my account hacked. I actually had one of our friends' accounts get hacked the other day, and we got an email asking for me to buy a Amex card for them or some gift card. And I was like, I'm sure that's not legitimate, but things like that it covers, but also transfer fraud. So if you get an email from somebody saying that, hey, I need you to wire me, $10,000 for this payment or something. And it's like, oh yeah, I know who that person is. I'll send it to them. And you send it, and all of a sudden you're like, hey, did you get that? You call them up. Hey, did you get that payment I just sent? And they're like, what are you talking about? That's transfer fraud. And that's an issue that, if you have cyber coverage or something like that, that'll be covered on that form. A lot of other things there too, but a lot of insureds like MMIC is one that I use a lot that has a med defense specific or med tech specific policy that will cover things like that. Also like HIPAA compliance issues, any fines revolving HIPAA will be there also. So again, broad terms. Exclusions, you'll see sexual abuse and molestation exclusions on some forms. You don't want that. That's a huge risk for you all. That needs to be on the forms. There are some carriers that will be silent on it, so there won't be an exclusion. It just won't be named. So if that's the case, then it is covered. It's just not covered usually within a certain limit. Communicable disease is something as well that you'll see exclusions for. So preferably you don't want to see it, but I would say 90% of the carriers out there are having some kind of exclusion around COVID, communicable disease, things like that. You realize I'll be doing a tongue twister. Ways to save. So some things to look out for that I like, and I always try to articulate and make sure that my clients and insureds know too. I know I'm running up on some time here, so I got to hurry up. I got to talk like the Micro Machines guy from back in the day. All right, here we go. So choose the right carrier. So just know the industry, know who you're talking to. You know, I know if I see a certain carrier, I'm not going to say any names, but if a certain carrier with residential assisted living, they're in the wrong spot because they're probably paying, especially with no losses, they're paying probably twice as much as they should be. You know, there are a lot of good carriers. James River's one for you all. Hunter Sure's one that you can have a lot of good, you know, less expensive policies. So there are a few that are out there that are really good for, you know, if you have 1, 2 facilities. As you get larger into more facilities, more beds, if you're paying more premium, that'll open up the carrier pool for you all. You know, smaller facilities do have a very, very limited amount of carriers that will actually look at it. So back to what I said, paint a pretty picture to carriers, talk about loss history, but same kind of thing. It's loss history goes through, you know, if you have any losses, you want to, when going through a carrier, you want to paint those in a pretty picture of what happened, how it happened, how we responded to it, what we did to prevent that from happening again. Not just say, all right, here's the losses. Yeah, we have a few lawsuits. We lost $400,000 last year, but we're good now. No, you want to dig it down in details of, hey, here's exactly what happened. Here's how we're going to prevent it. And from our side too, from our risk management, we'll step in and say, you know, this is what we've done to help the insured. This is where we're going to go from here. If you see stats over the last 12 months, there's no incidents, things like that. Again, goes down your processes and procedures, making sure those things are tuned, are presented well, are articulated, educated throughout your groups and your homes. And again, approach the proper carriers. There's carriers to go to for certain risks. There's no carriers to go to for certain risks. And, you know, if you're a senior living focused assisted living with residents over the age of 65, that's a totally different ballpark for carriers than if you're a mental health facility, you know, more board and care for 18 and over. Completely different carriers, completely different people that write it or underwrite it and how they write it. So just know what you're writing and know who you're going to go to. Stay transparent with carriers. Again, it's very, very important. Every time I get an insured or client, I'm going to talk to my underwriter at the carrier and go through the account, talk to them about the individual, the administrator, the owner, how they're operating, what they've done, their history, their experiences, what kind of, you know, even like being a part of ROMA, of CALA, of CHCA. Those are huge things because it shows your dedication to the industry. It shows you're part of what's going on and you're not just doing it because you want to make a paycheck, but you want to be part of it. You want to know what's going on. So things like that, those stories are tremendous in selling accounts to underwriters to write it. And a lot of underwriters are part of associations as well. MMIC has Regina Enton. She's out here local. She's part of CHCA. I think she's been part of CALA before too, but you know, people that know the industry, know well, are part of it also and see the insureds, take this extra time. You know, I always like to introduce my insureds to my carriers too, if my insured would like to meet them. You know, sit down, have those conversations, stay transparent, get creative. You know, if you have multiple locations and you have one location that's just performing horribly, has had a ton of losses, you know, look to spin that off, have it on its own policy. So your other, you know, 6 locations are good, no losses, you know, we'll get a great rate on that. And until that one performs better, until you can get it running the right way, you know, peel it out so it's not creating so much havoc for the other ones. You know, if you're a little more risky and, you know, like to gamble and take on some of that risk, there's carriers that will reduce limits. So, you know, typically you'll see 1 million, 3 million for AL. If you want to go, you can't really reduce the GLPL limits because you're required to cover a certain amount. But for like abuse and molestation, you can get that reduced. You can get higher number and auto reduced. So things like that you can look at to try to get reduced limits for reduced premium as well. But all of that stuff, you know, painting pictures, talking to the insurer or talking to the carriers, getting them on the same page, keeping the losses down. Those are all ways to save, you know, proper processes, proper documentation. Those are all things that the carrier wants to see when they look at an application, look at an account, as much information as possible. You know, we do these applications and I'm sure everyone does them every year, renewal applications and things. It's a pain in the butt. It's, you know, 5-6 pages of information on information. but the carrier needs to see it. The carrier wants to see what they're insuring. And if they don't understand the account, they're not going to give you any credits. They're not going to give you, their own will of saying, yeah, I'm going to insure this account because I think it's good. They want to know the details. And so that's the job of the broker to really dig in with y'all. All right, I'm running up. Let's go. So property, so proper limits. So TIV is total insured value. So that's the value of your actual property. So your homes, what's in your home. BI is business interruption, as we spoke for before. BPP is business personal property. And that's what is, your furniture, any equipment, things like that is all BPP. Computers, stuff like that goes in there. Make sure those limits are proper. If you have co-insurance, which is part of the property, so you can have agreed value, you can have actual cash value or replacement cost. Replacement cost is where you want to be because it's the cost to actually replace what was damaged. If you look at your policy and you see on ACV, which is actual cash value, you probably want to get a different policy. That just means if you have, a 20-year-old home and you're on ACV, you're going to get reimbursed for a 20-year-old roof. So it's not what it's worth now. So make sure you look at that because again, it's going to reimburse you for what that actual cash value is of that dated roof, that dated wall, whatever it might be. So you want to go either replacement cost, or if you're with co-insurance, it's another option. It's a little more risky. You have to make sure you're insured correctly. If it's 80% co-insurance, you got to make sure you're at least 80% insured to the total insured value. Again, if you have questions here, we can dig into that. Deductibles for wind hail, you'll mostly see, best I've seen is like 1%. Some will be a flat deductible. Mostly, you'll see 2% or higher. If you have a larger building with claims and issues, you'll see 5%. But if you can get 1%, 2% around that, it's pretty common and pretty good. Proper locations information. This is just going into some things that make sure the information on your policies is right. Make sure it's proper addresses, because the last thing you want to do is like, all right, I had a fire at one of my locations. Okay, what location was it? I'll make sure it's on the policy. 1234 South Birch Street. Oh, sorry, I've got 1235 South Birch Street, not 1234. Sometimes the carrier will, be fine with it and just chalk it up as a clerical error. But there are some carriers that'll be like, no, it's not properly listed. It's not insured. It's a different address. We're not gonna cover it. So make sure the information is correct and the insureds are correct. Things like that. Ways to save. Again, if you have multiple locations, look for blanket limits. Instead of insuring each one individually, you can insure all 10 of your properties for one large limit, and that'll usually be cheaper than insuring them each individually. And you also, the likelihood of you having a complete loss of all your buildings at once, if a big tornado comes through all of Denver and knocks them all out, very unlikely. Usually you might have one or two that happens if the hailstorm comes through. But with blanket limits, you'll be covered for the limit of that entire blanket. So if your total insured value is over your 10 properties is $10 million, then even if one gets hail damage, you'll have a $10 million limit for that. So that's a good way to be creative there. Increase deductibles. Again, if you want to be a little more risky, you can increase your deductibles to get some coverage or some reduced premium. Billing improvements, stay, again, kind of like the liability, stay transparent with the carriers on what you've done to the buildings to make sure they're safer. If you have like different safety measures like handrails, things like that, a newer roof, a stronger roof, all those kind of things, newer electrical, newer heating, newer plumbing, all that stuff is going to make your building better insurable for the carriers. And again, we talked about co-insurance. Work comp, I know work comp's a big thing for a lot of folks. So what to look for? Work comp is actually one of the only policies that the rates are not getting bad or not getting worse, but claims are happening more. So that'll make your modification number, your EMOD, go up, which will therefore make you pay more money. It's a multiplier. So it'll make you, if you're having the more losses you have, the more your EMOD goes up. So if you're below 1, you actually get a reduction to your premium. If you're above 1, it's a multiplier and it adds to it. So less losses means less EMOD. So for proper payroll and class code, look at your payroll, see on your work comp declarations page what your payroll is, make sure that's actually correct. If it's, you all have fluctuating payrolls all the time with caregivers leaving, coming, if you have reduced beds that are filled, then you're going to have a reduction in staff more than likely. So just make sure that's close to what you need it to be. You'll have an audit at the end of the year, no matter what, which you can usually pay more for, but always look for an audit, always do an audit. Because if you don't do an audit with Pinnacle, they'll actually charge you a 6% increase no matter what, even if it's lower payroll than you had estimated. If you don't do your audit, they're going to charge you for it. And then a rating tier, Pinnacle has multiple rating tiers of the risk. It goes from, I think Allegiance is the worst. And then each one has a better rate for your class code. So, that's one thing. If you've had a good loss history for the last few years, you can get some better rates there as well. So just have your broker look at that, see what rating tier you're in, see if you can improve that. Ways to save: claim management, manage claims. So manage losses. If you have an incident that, we all deal with fraudulent issues from time to time, things that happen that aren't necessarily true, legitimate, things like that. We understand, but manage that. Have the carrier, if it's Pinnacle, look at doctor's information. Was this a pre-existing injury that the person just came on board and then said they got hurt and now I have to pay for shoulder surgery? Look for the doctor's note, look for the doctor's information. And then if it is something that happened on the job site, happened at the facility, and they do need to get surgery or something that's going to keep them out for a period of time, look for a modified duty. It's down here, return to work policy, so that puts them back in work and off workers' comp. So if they can't come back into the facility because they can't handle those duties, they can go work at at a Goodwill, something like that, where they can be put to work at some kind of capacity. But what it does, it gets them off. You still have to pay them, but it gets them off of your work comp. So therefore, it doesn't increase your losses for that individual, because you're either going to pay for it now or pay for it later, and pay for it later usually costs you a lot more. Like I said, you can pay for that modified duty, have them work somewhere if it's not your facility, somewhere else, but it gets them off the workers' comp. It gets those losses from happening. Cost containment is a 5% credit that is given back to the insured for certain safety procedures, safety protocols, things like that. It takes about a year to get in place, but once you do, it's pretty easy to keep. And again, 5% credit on your workers' comp, pretty easy to do. ILCD program is a loss control dividend program. Most carriers in Colorado, the ones that I'd write workers' comp for, have this program. You have to have a certain amount of premium depending on the carrier. It's usually around $30,000. If you're paying that much in premium, you can buy into this program. It's usually 5% in, and then depending on your losses, if you have good losses, then you can get a big chunk back. And again, if you want to go into the bigger details, this something that you can get into. I've had clients that have put, on a $100,000 work comp policy, put $5,000 in and get $35,000 back at the end of the year based off of their losses. So if you're confident in your losses, you're confident in your employment safety, then that's a good program. Furloughed employees, class code. So if you have any employees that have been furloughed or a reduction in staff, you can actually move those to a different class code that is a lower rate and pretty much close to nothing. So if you've had to reduce staff but haven't actually let them go and just furloughed, you can move that payroll into a different class code to help reduce the premium. Deductible, I definitely would recommend having some deductible on your policy. If it's $500, if it's $1,000, a lot of my clients have a $25,000 deductible, or sorry, $2,500 deductible, but you can go up and up and up. It just helps you, if you have good claims history, not a lot of claims, this is perfect for a way you'll actually get a reduction off your policy premium, and then it'll keep those minimal claims off. So, your little, if you have bites, things like that, things that don't really cause surgery or anything, that just might be a $50 doctor's visit or something, those won't go on your losses, which will keep, you'll just pay out of pocket, which that's much easier than having a higher mod that you're going to be paying for a while. Then again, carrier, you'll know where you're at. Pinnacle is not the only player in town. There are other folks to look at. Copper Point has been a great one. They got out of the space for a minute due to COVID. They'll be back in, and their rates were a lot better than Pinnacle's. But Pinnacle has been a good carrier for a long time. If you are with like a PEO type of place and you have bundled work comp, Typically, if you go to a Pinnacle or something like that, it can be less expensive than work comp with a Pinnacle or with a PEO. But there are some PEO programs that have really good work comp, and it could actually be cheaper. So I just recommend looking at that and seeing what works best. All right, hustle. Additional policies to consider. EPLI, we talked about it, your issues with your employees, creating any claims. We're seeing this a lot more just as claims increase. The instances for your employees to be disgruntled for wage and hour discrimination with all of the rules and regs right now about overtime and things like that. It's been a huge issue, wage and hour. Again, employment discrimination, things like that, improper hiring protocols, those type of things all fall under this. As litigation becomes more prevalent, this stuff happens more and more. Cyber, we talked about it. Again, relatively inexpensive. Sometimes you can get it pulled into one of your package policies. Umbrella, if you have an auto, if you've had claims, things like that, we're seeing the amount of, not just the amount of litigation, but the actual suits be more and more expensive. So umbrella is something that we've seen more and more people buying. It's becoming really expensive now just because of the necessity for it. A lot of contracts require it, but that's something if you are worried about not having enough coverage for your policies, you can look at an umbrella. Auto, if you have vehicles that you drive regularly for the company, if you drive residents around a lot, I would look at an auto policy, a commercial auto policy, and putting that with the carrier and with the company and not yourself. If you're personally driving around residents and you get in an accident and they are hurt, injured, you're in for a rude awakening, especially when they understand that you are with a company and you're driving residents around. A huge red flag for lawsuits and those ambulance chasers to sue. Directors and officers, this only would really pertain to if you have a board of directors, an advisory board, anything that's kind of an overseeing group that dictates the operations of the entity. Directors and officers is just pretty much the E&O for the board or that advisory group. Crime, again, can be put on a lot of policies already. Look for it. If it's not there, it'll cover employee theft, vandalism, things like that, that at the facility. How to protect yourself. I know we've talked about this a lot through here, but claims review and process, how to keep claims down. And if you have continued claims and continued issues with lingering claims or reoccurring claims or even near misses, it's like, hey, I've had a lot of slip and falls. I've had a lot of, close abuse allegations, things like that. Nip it in the bud before it gets too crazy. Talk to your broker about it. Try to put in some process and procedures, education around proper use, proper procedures, things like that. Education, same thing, educate your employees on how to operate, educate them on proper procedures. We have, as Assured Partner Senior Living, a myriad of education for staff, resident staff, things like that, that help with this, falls management, medical records management, all that kind of stuff. Process and procedures, like I mentioned, make sure these are tuned, fine-tuned, well distributed, well followed, documentation. Any issues happen, any incidents happen, put it down, have that. If you have litigation or anything that comes from it and you don't have any documentation, for lack of better words, you're screwed. You need to have those things put out there. Hey, this is what happened. This is how we responded. This is who we contacted. We did everything right. And here's that. And then we'll work with you on that to talk with the attorneys, talk with the carrier and show what actually happened, what went on, and how it went through. Transparency, again, I think last month we had Serenity app. That is a communication app for families of your residents. That communication is huge. Build that gap with them, make them feel that their loved one is comfortable, happy, ensure them that, show them what you're doing with them day in and day out, make them know and understand that they're in a great place, happy, and things are going well. Same thing with on the other side. For me, I'm talking to carriers. I'm communicating that. I'm staying transparent with them. I'm going through and talking about the count, what's good, what's bad, just being honest. But want to make sure you be transparent and don't try to hide anything. Contracts, more and more, I've seen arbitration agreements becoming necessary and doing it correctly. We have our employment attorneys and resident attorneys that will go through employee and resident arbitration agreements. I would definitely recommend those. If you do get into litigation, it helps prevent that from going further. So definitely look at that. And if you have any questions, we can give recommendations on verbiage. You want to make sure that they understand what they're signing, what they're getting into, what they're looking at. It's written out there in big letters, easily to understand. That's where you get into a lot of issues. If you goes to litigation or goes to the courts and they see the arbitration agreement that was signed, but it's vague and it's not easily understandable, it's going to get thrown out. So make sure it's something easy, and you tell them when they sit down for it, what's going on, what this is, and just make it as clear as day. Vendors, make sure you have certificates of insurance for all your vendors. If someone's coming into your home, if it's home health, whatever, make sure you have updated COIs, make sure you have some kind of certificate requirements or insurance requirements, and make sure you keep those annually on track. Your carrier, your broker should have ways of keeping those on track for you. Make sure you have that entity separation, which for this, I just mean, I've seen prospects or people I've talked to that have had their personal, name, Blake Crawford, listed on their policies. Don't do that. You need to have the entity, you need to have separation, because you don't want to get sued personally. If they sue the company, that's normal. You don't want to be sued individually. You want to keep that separated. Looking forward, I think more and more necessity for niche providers, niche brokers that understand your all's risk. It's just becoming so intricate, and it's a necessity to understand what you all deal with day to day, what the risks are, what the issues are, knowing where things can come up. So stay close, find that person you trust, you can talk to, have those communications. A lot of folks like, I talk to my broker once a year, about a month before my renewal, and then to collect a check, that's about it. There's much more they can do. There's much more that we can do to protect you, help you out, educate, just a lot more. And so things are going to get worse just as the carriers get out of the space. So stay ahead of it, stay transparent, stay well. But again, thank you guys for all you do. You all do some amazing work. More and more I talk to you all, I love you so much. You all do some great things, and just very, very cool to see it. So I'm glad to be part of it, glad to be part of the industry. And Vern, thanks for letting me
Blake,
speak.
Wow. That was.
Sorry, I had to hurry up. I have a clock running. It was like, oh crap.
That was a lot. So I wrote down a couple of questions that I had, and hopefully there's other questions that come out. But the first thing I want to say is, one thing I don't see a lot of that really needs to happen is business interruption insurance. If you guys have a fire or something, something happens, and things happen, that business interruption insurance is a lifesaver, because a fire, you're going to be out of business for months and something like that. And I've seen this happen, and it's devastating. You lose your business in essence, unless you've got an insurance like that.
And that BI will cover you usually for 12 years. And then there's an extra period at the end they'll throw on. So it's usually around, or 12 months. It's usually extended to about 16 to 18 months of actual coverage. So if your buildings has to be completely rebuilt, if it takes a year, you can be covered through that whole year for any lost revenue.
Okay. Question on the deductibles. You said that it would be 1%, or that's one of your choices. 1% of what?
Wind hail. So that's 1% of your total insured value for that building. So if the building is insured for $300,000, it'll be 1% of that, or $3,000. Is that right? 30,000.
Sounds right.
Math. Yeah.
Yeah.
So it'd be 1% of the total insured value, 30,000.
Okay. Yeah. Well, that's not bad. And then I was curious about that blanket policy, because as I mentioned, we have many properties, and we're not happy with our current insurance company. So, I think we've got 26 properties right now. That blanket insurance is very interesting. Can you explain that a little bit more? And keep in mind, we typically just need the property insurance, but what would that look like?
Yeah, so they'll all be on the same schedule. So you'll see your actual policy that'll list location 1, building 1, location 1, building 2, all that kind of stuff. So you'll see all of your buildings on one policy. And then instead of having individual limits for each one, it'll usually list the limits, but then it'll have it as a blanket limit of all of the total insured value for all of it. So it'll incorporate the entirety of the properties to that one limit as what you'd be for on losses, like fire that burns the building down, things like that. Wind hail's the only deductible that's different usually from other ones, but you'll have that total limit versus your individual limits for specific properties. And you'll usually get rate decreases as well because it'll be a lump sum. It'll be a much larger group. You know, if a carrier can write a $200,000 policy, they'd much rather do that because it's more premium for them versus a $2,000 policy. So you'll get rate decreases, you get some credits, things like that. And it's just, again, you'll have that higher limit in case there is, so say you have where your building's insured for 300,000 and you just haven't changed that year after year. And you look back and it's actually probably worth about 400,000 or 500,000 and you have a complete loss and you're like, well, that doesn't actually get me what I need. You can have that full limit at your disposal for any loss within that blanket of policy or blanket of properties.
On the properties that we have loans on, does the bank see that the property is fully insured?
Yeah, so it'll have all the limits broken out, and it'll have a schedule, and usually it will be incorporated with an SOV, a statement of values that goes through and breaks out every individual building of how they got to that total blanket limit. So same thing. It'll be, most of my larger schedules that have multiple buildings are all blankets, unless you have one building that is like your problem child, has the losses, has the issues, you want to peel that off and put it on its own policy so it won't affect the other ones. But yeah, your lenders and everybody will see that's correctly covered to whatever it's appraised for.
Okay, great. So that's my list. Does anybody else have questions?
Vern, I had a question. This is Janet Cornell.
Hi, Janet.
Hey, we wanted to find out as a group, once COVID is over, and if we can get the state health department to take off the infectious control surveys, will that reduce our premiums?
Not necessarily, because you're still going to see the losses. Most of the carriers they're dictating their premiums and rates by losses. And so the losses are still going to be there. The only thing that will help it is all the carriers do look at your surveys as you fill out applications. You'll see deficiency, they'll look at deficiencies, your plan of correction, things like that. And so with the infectious disease, that's just another thing they're looking at. So it doesn't give them a reason to increase premium based off of a bad survey. But it won't affect it much. Again, most of it comes with losses. And the biggest way to save money is to not have losses.
Okay, thanks.
Yep.
Blake, thank you so much for the good information here. We sure appreciate it. From the small facility world, from our side of things, it feels a lot of the time, it feels pretty hopeless in terms of a few things, but especially with respect to insurance premiums. Do you see an end in sight for this, the tide turning, some other carriers, and you may have hit on this, forgive me if you did, some other carriers beginning to enter into the market again, maybe perhaps a change in the tide in lawsuits, something to begin to slow down this this snowball of premiums?
Yeah, good question. And I wish I had better news, but honestly, right now, no. Just looking through claims reports, looking through litigation trends, issues across the nation, it's not getting better. The good thing is there's creative ways that are coming up. It's harder for you all as smaller, facilities, but as you get into the bigger ones, there's programs out there that people will actually pay $100,000 just for a piece of paper that says I have insurance, and they're self-insuring themselves because policies are getting so crazy with high deductibles and limited coverages. So they're willing to pay, if they're paying $1 million in premium for a policy, they're going to pay $100,000 for a piece of paper and then just take everything themselves and hire and handle everything in-house. And so that's based off of these issues and these rising premiums and restricted coverages. So unfortunately, no, I think until the litigation trends go down, until Congress really steps in and puts a stop on a lot of that, I've seen before, this was, 10, 20 years ago, probably close to 20 years ago, they've put restrictions on litigation for senior living facilities. And so until they do things like that, where they can actually cap losses,
Yes.
It's not going to change. So I think with COVID, it's going to make a huge difference just because it's going to be bad before it gets worse. But I think that bad is going to make the need for it to change somehow.
And with that, it's just one more, if I may, since you mentioned this, Blake, does that type of government intervention, does that need to happen, do you think, at the federal level, or is there a shot at that at the state level, maybe?
It starts in the state levels, honestly. That's where it starts. And that's where it gets momentum. That's where it gets a voice. That's where it gets, that put up in lights. And as it grows from the state level, it'll get pushed to the federal level. But yeah, it can start with our local and state government before it goes more. I guarantee there has to be something, because New York is just going to get destroyed.
Right.
With first handled COVID, putting COVID positive individuals in nursing homes as a way to combat it. That's just, looking back, like, that's the stupidest thing I've ever heard of in my life. And that's what happened. And they're seeing those claims, they're seeing that litigation start, those complaints. And so they're going to get crushed. And that's why you saw the false numbers of nursing home deaths and all that kind of stuff and getting called out. So there's a lot of things that are just in flux right now. And again, it's not going to get better for a few years. But I think that's again why a necessity of really knowing the marketplace, knowing the carriers, knowing who wants to stay in it. There obviously are carriers who this is all they write. This is what they do. This is their bread and butter. They'll write it all day long. That's there. There are still a handful of them. There just aren't as many as there used to be.
Blake, you do know that Colorado had the same mandate. We were required to take COVID positive back to our small assisted livings, and skilled nursing units were also required to do that. There's still a bunch of us fighting that, so it never happened.
Yeah, this was.
But you're still going to see that happen in Colorado, because we were all under the same.
So I was talking more about not necessarily if you have a resident that's COVID positive, bring them back into the facility, but they were having people that were off the streets that were going to hospitals and saying, we can't take you, go to a nursing home. And so it wasn't, they were not residents of the nursing homes, but they were just people that they thought could be nursing home for it. And that, like, this is early on, like the first few months of it, and it's just bad. Yeah.
So Blake Wendell here. I don't know if this is a question, but this is something that I've always wanted to find. I want an insurance company that wants to take my side and fight for me, not just settle.
Mm-hmm. Yeah, so that's
and I haven't found that yet. I mean, even Pinnacle, they talk a mean game, but as soon as my employee says, oh, I'm feeling sore, they just give in and they tell me to just put him in a chair and pay him. So I don't see anybody fighting for us as the business owners.
Yeah. And that goes on the shoulders of your broker a lot of times too. So for us, we have a claims management team only with workers' comp. We haven't broken out. So we have our clinical risk management and clinical claims team. We have a work comp claims team, and then our generic property and auto and things. But for work comp specifically, that goes to the modified duty return to work. So it has your broker having those tough conversations with Pinnacle. So we write millions of dollars with Pinnacle here in Colorado, and it's having those conversations with those claims folks that are handling each incident, saying, all right, let me see the doctor's information, let me see the notes on the incident, what's happening. And if they're saying go back to work, but they won't work at your facility, put them at an ARC or a Goodwill, something where they can do that, but they have to go back to work. And if they're saying, no, I'm not gonna do that, I'm just gonna sit here all day, you can require them to go to a place and work if you can have them back at your facility. And if they don't wanna do it, they have to do it. If they don't want to, they're off workers' comp. You don't have to pay them, and they can't stay on workers' comp either. But it's somebody fighting those battles for you that we have conversations with every day. And it's very common occurrence as well. So you're not the only one that's having to deal with that. It's terrible, but people take advantage of it all the time. And it's very easy for Pinnacle or whomever it is to say, yeah, just pay them because your premium's going up, they get more money. So it's somebody that's advocating on your side to help fight those battles, that understand the process, understand the game, and understand how that works.
So Beehive down in Albuquerque had a death, and they were being sued over that death. And finally, Beehive itself took them to court and fought it and won it. The insurance company wanted to pay $2 million to let it go away. And they fought it, and it cost them, I think, $50,000, and they won. So I think insurance companies need to take our side. They need to fight for us. We're paying them.
So you'll look in a policy, there would be a consent to settle clause. If there's a consent to settle clause, that will give you the right to have the consent to settle. So it's like, all right, I want to settle this, or I want to go to court and I want to fight it. And that will be to your discretion. So you'll have to look at the proper forms of the policy, but you'll look for that consent to settle that's in there.
So we can actually, I'm sorry, Blake, this is Jeff again. I brought up Wendell's question, I don't know, a year or two ago at a CALA conference, which is I think in my tiny little world, I worry that what's perpetuating this is that, the insurance companies quickly move to settle, and that if someone would step forward and counter sue these folks that are making these claims, that it might slow some of this down. Do you suppose, Blake, that if a group of owners got together and went to their broker or went to an insurance company and took this up with them, I don't know what that would look like, that might have some influence on that? And are you also saying that if we want, we can elect not to settle and we can fight through our insurance company?
So yeah, and Jeff, by the way, your fresh haircut, I like it, man. Sharp.
I feel like thank you. Thank you.
So yeah, back to kind of that same thing. If building up a group of folks to try to combat that, it's not going to do much. You're talking probably 50, 20, individuals going against a, $1 billion insurance carrier. It's not going to be something that they're going to listen to. So that's why, again, one of the things on the presentation is look at the forms, dig down into it. And if that's issues, talk with your, a big thing is talking with your broker and the insured about, hey, these are things that are really important to me. I want to consent to settle. If I have a lawsuit, I want the ability to say, I want to fight that. That's a fraudulent claim. I don't agree with that. We were at no fault there. I want to fight it. And you can, there's a consent to settle in there. So you have that choice of the policy. And if that's the thing you want to do, sometimes you can have it put in there. It might cost a little bit more, but some carriers automatically have it in there. Some will add it, but again, will come at a cost. But yeah, I mean, there's absolutely folks that are on the same boat. Like I don't want to continue to have to pay out these huge claims that have to go on my losses that then therefore make my premiums go out the roof and all that stuff. So it absolutely can happen.
Thank you so much, Vern. I'm so sorry. I know time is of the essence here, but I'm gonna call out Michelle Pinkowski. She just posted something. Michelle, could you maybe just share? I'm not sure I understood what you posted there about the insurance issues, but it looked like it could be helpful.
Yeah, absolutely. So, for ROLNA, my law firm now is tracking legislation across the country related to residential assisted living. And what we're seeing, the benefit of being able to do that is we get to see the trends. And there definitely is a trend among many states, mostly red states, I'll say it that way, for COVID liability prevention. So in the cases, if it's just straight, generally the bills are written very similarly. If it's just straight negligence, you get COVID in your facility, there's going to be a liability waiver so that people won't be liable for residents or guests or mostly residents or guests who contract COVID. Now, there wouldn't be any liability waiver if there was reckless disregard or some kind of, intentional or more wrongful conduct. So we are definitely seeing that trend. And I think probably everybody that's a member here is a member of ROLNA. And what you can do is you can see our legislative tracking tool on the ROLNA website. It's in the members only place, and it's constantly updated. So you can see exactly what's happening with those bills. Now, unfortunately, we don't have that bill introduced. We don't have anything like that introduced in Colorado yet. So it's definitely something that can be done, but it hasn't yet.
There was, Michelle, correct me if I'm wrong, but I believe there was a bill brought up like early last year, and it was turned down pretty quickly. So I believe that.
Oh, it might have been. Yeah, it might have been before we started tracking everything. Yeah, you're right, Blake.
Yeah, so
Michelle, is it impossible to get legislation like that passed in a blue state?
It's less likely. It's definitely less likely.
Okay.
But
Yeah.
the effort's out there. I mean, a lot of the associations are trying to get something passed, trying to work with the state senators to get bills out there. It's just a battle right now.
I think the effort is still worth the effort because, the reality is that, this is an unprecedented situation, of course, cliche to say that, but lawmakers really need to see the balancing factors. I'm a civil rights lawyer that lives in Boulder. My political leanings, but I also am a former insurance defense attorney. So I know the balancing of the factors here between, the benefit of being able to pursue meritorious claims versus, having to protect our businesses and the services that we can offer to our elderly. We can't drive everybody out of business through lawsuits based on a pandemic that's a once in a 100-year thing. So I think it's definitely something worth arguing to policymakers.
Mm. Thank you, Michelle.
Mm-hmm.
Thanks for your input, Michelle. Always good to see you. Do we have any other questions for Blake?
May I just throw one more out there for you, Blake? You mentioned a small ray of hope in all this, which was that Colorado is maybe a little bit less litigious than some of the other states that you've seen. Any thoughts on, any idea why that is? Does that get talked about in your circle?
Michelle probably would know more about the reasoning behind it. I just know it's not as publicized. We don't see the billboards, the commercials as much as a lot of other states do, just because of that. And it might stem from just claims and how they've been handled and settlements have been in other states that have been higher, and so people can get higher. And attorney things will focus on those other states versus here. But I'm not sure the exact reason or why it's not as litigious as some other states. I think West Virginia is one of the heavily litigious states, which kind of was surprising to me, but
I can tell you, we have damage caps. We have damage limitations. So the upside for bringing claims isn't as up as in other states.
You're kidding. That's okay. Wow. Huh. So there is somewhat of a cap of some kind that exists in the state of Colorado.
Yeah, for
I'll
sure.
be darned.
Especially, you know, it's always tough when you're evaluating a claim involving an elderly person. You know, I hate to say it, but then, you know, the unlimited part of claims in Colorado is things like wage loss. We don't have that if you have an elderly person. So then it's subject to the damage limitations, and those are by statute. We've had those for quite a long time.
Blake, do you feel like there's one or two brokers out there that might consider that as they're doing their underwriting? You guys do, well, maybe that's you guys, as you do your underwriting work on premiums?
So we don't actually underwrite any policies or premiums. It's all the carriers that do that. So the brokers are the ones that have the relationships with the carriers to put the policies in place or present them to the insured. But we don't actually do any of the underwriting ourselves.
Got it.
But we do articulate those responses back to the underwriters and communicate things like that to them. But nothing that we do ourselves.
Thank you.
Okay. Last chance for questions. Well, Blake, thanks so much. That was an awesome presentation. If you wouldn't mind sending me the slides, we will upload the recording and the slides to the website. I know there's a lot of information there, and you may want to go back for a refresher. And Blake does have his information, I believe, in the chat. So again, you can save this chat file and have all the contact information that we've collected tonight for your Rolodex. Rolodex, boy, that dates me, doesn't it? Well, you know what I mean.
Thank you for the opportunity. Appreciate it, man.
Thanks again, Blake.
Can you send me one of those? I've never seen one. Oh,
I still have one.
All right. So now we go to the haves and wants section of our meeting, and this is an opportunity for anybody to just speak up and say if you have a service that you're welcome to present that service. If you have something that you want to present, or if you need something, this is an opportunity to express it. So does anybody have any haves or wants this evening?
I'll go.
All right, Jay?
I like that you got the J part. So I'll piggyback off of Blake. And it sounds to me we won't have the legislation in place anytime soon. So the idea is to mitigate, right? Get ahead of it as much as possible. Having HR and payroll solutions that help you do that can be key to the workers' comp side of things. So things like when your employees are clocking in, having them verify they don't have a temperature, having them verify they haven't been in contact with anyone. Those types of things can help mitigate any kind of issues. And those are the types of tools that we at Paycor offer in our LTC side of things. So I specialize in long-term care. I work with hospice, home health, assisted living, and so does the rest of my team. So Blake and I partner very closely together on payroll, HR, time, and so on. So company name's Paycor. I go by Jay. Hi.
Is Paycor a PEO?
It is not.
Okay. So I'm just a little confused what you guys do then.
So Blake does the workers' comp side of things, right? So Paycor is the technology behind your workforce, meaning that when you all are doing payroll or you're trying to see who signed off on, I don't know, a company policy, a COVID policy, a safety policy, that can be housed in one software solution, which is Paycor. So it's just it's kind of like ADP or payroll, Paychecks or any of those, but not a PEO model in that we're not taking on any of the workers' comp liability. We're just giving you the tools to operate your HR functions as well as your payroll time scheduling functions, and then integrating benefits, if we need to, and so on. Does that
Terrific.
help?
Yes, it does. That
Yeah.
much more clear. And did you put your website? I did see your contact info.
Yep.
Do you want-
Paycor, I can put in paycor.com. Be happy to do that.
Jeanette's great, and we partner with Paycor across, again, specialized within long-term care and assisted living, and knowing all the nuances and regulations around what needs to be put up in lights and things like that. So she's great, can answer all the questions. I always go to her with all my issues and things with clients around that. So very nice.
All right.
Yeah.
Well, thank you.
I worked
sharing.
for ADP and did EHR stuff for a while, and then they asked me to come in and use my expertise in revenue cycle management, EHR, and then try to hone in that for the workforce in long-term care.
Nice.
Terrific.
Nice to meet you all.
Thanks for coming. Does anybody else want to share anything? Michelle?
I'll share.
Janet, yes.
Yes. I've gone through the regulations pretty thoroughly. I was on the rewrite team in 2018, been working on them ever since. I've gone through my own homes to make sure we're compliant. So if anybody needs help with that, you're welcome to reach out to me and I'll be happy to help you. Also, if you're running more than one home, sometimes things slip through the cracks. I run as many as 8 at a time. So I'll be happy to help you to keep things from falling through the cracks, and how to be compliant, and how to have happy employees while you're trying to be compliant, because we've done some really fun things, prizes for getting your training done, and just keep it lively, and because this has been a hard year for all of us. So we've just been whacked on by the state health department for guidelines, but I'll be happy to share any of those with anybody.
That's terrific.
Vern, if I may, endorsement for Janet. I don't think everybody was on the line when I missed this, when I mentioned this, but the surveyors of the state of Colorado fear her because she knows the regs inside and out, and she gives them no quarter. She's fair. She complies with everything. And she keeps them very honest. So if you ever need some consulting help, she's a good one.
Awesome. Thanks.
Thanks, Jeff.
Michelle, you were absent when we did the little plug about Pinkowski Law, but now that you're here, would you like to say a couple words?
Sure. Yeah. Sorry I was late. It's been a busy day. I think everybody probably knows me. My name is Michelle Pinkowski. My law firm is Pinkowski Law and Policy Group, and we help small assisted living and other group home owners, especially around the country, on fair housing and zoning issues and anything to locate homes. And then within Colorado, we help with a lot more issues, corporate formation and licensing and other regulatory issues, as well as the zoning and HOAs and all the fun neighborhood stuff.
Wonderful.
Yeah,
Thanks,
good to see
Michelle.
everybody.
Glad you could make it.
Thank you.
Okay. Anybody else? Any more haves and wants?
Real quick, anybody, you don't have to take time with it now, but I think a lot of you have my email. You have Vern's contact info. If anybody knows of a good contractor in Colorado that can do a garage conversion project, we've got the funds lined up. The plans are done. It's ready. I just need an honest contractor, which I've not been able to find so far.
So I know a guy. I'll send you a guy.
You can pass that on to Vern or Blake. Yeah, Blake, if you know anybody. We're just trying to get bids right now, and unfortunately, we've had one that's you all heard this story many times, but one that's took our deposit and disappeared. So just looking for somebody we can trust and that can do a good job.
Don't take Ram Construction. Don't take Basim. I
Who-
ended up paying more than what he asked for. So he goes and orders stuff, and then gets them in a big huge box and then just put them back when he doesn't use everything and then takes them back to his house. So don't take him.
Who was that?
Basim Ram Construction.
Okay,
Go ahead
thank
and
you.
put that into the chat, Fran, so that we can share it with
Yep,
everyone.
he will come and talk. He will talk smooth and he will act like he knows everything, but he doesn't know anything. And he will ask people to work. And man, he's so terrible. I ended up spending double than what it was anticipated. So,
Sorry.
So,
mm,
Fran, will you add that to the chat just so that we're all
yeah,
aware?
sure. I will just put it. Yeah.
Okay.
Thank you for that, Fran.
Yep.
And just to remind everybody, we will leave the platform open for networking between you guys until you're done. I know it's a little bit late, so if you do want to leave, you can. I'll throw in one more announcement. So I do have a few listings. Right now I have a listing in Centennial, 11 beds. It's currently under contract, but we'd love to have backup offers on this. They're going through SBA, and you just never know with SBA. We've got 26 memory care that is south of Denver that should be going under contract tomorrow. So I think that one's good. And then we've got 40 beds on the western slope in Grand Junction. And that one is listed at 3.3 million. We don't have the marketing packet ready for that yet. It will be ready within the next week. But I did want to make you guys aware of it if you're looking for a nice, good turnkey operation, which is what we would call this, because the current operator of this does not have to work in the business. He actually takes vacations. So that is something that isn't usually available. What's that?
3.3 million for that?
3.3 million. Yep.
Wow, I better put mine up for sale.
Well, when you're ready to put yours up for sale, I'd love to help you out. So, all right.
That's a good thing to hear.
Good. Yes. Yeah, it is. You know, and again, if you're looking for some valuations on your properties, if you'd like to get a ballpark of what that might go for, most probable selling price is what we would call that. It's not an appraisal. It is a broker's opinion, and appraisals are a little bit different. So I can always help you out with that. And if you're ready to sell, we can take a look at that. With that said, I want to thank everybody for showing up tonight. We had a pretty good group. We had an awesome presenter and a great presentation. It's good to see familiar faces. It's good to see some new faces. And, you know, we welcome everybody to keep coming back and network and learn and share. So I will leave this open until everybody's gone. Again, on the chat session, you can click on the little button with 3 dots, save that chat, so you've got all the information from everybody that was here. So wonderful to see you guys, and we will see you next month.
Thank you all for being here tonight. Sure,
Thanks, Vern.
been good to be with you.
Thanks, guys.
Does anybody want to talk about visits after vaccines?
You know
'Cause
what,
I sure
Wendell,
don't
there's no official, you can have indoor visits. Those were mandated the end of December, but your family still have to wear a mask. That's the state health department regulations. We're pushing on them to give us better guidance on that. But that's all they've done for right now.
You think we're going to get any leeway with that in the future?
We should.
I just think after you have the vaccine in your home, why? I mean, I don't have a problem with the masks, but
Yeah.
but we need to start doing indoor visits. My people are really struggling without their families.
Yeah.
Well, you know
Yeah.
what, Wendell, you were mandated to do inside visits and it was very, it was not well known, but the state health department will come in and flag you. You were supposed to offer indoor visits now.
Well, yeah, but
It's
they
a
have to
mandate.
be tested within 24 hours.
No, they don't. They just have to wear a mask. It's inside visits 6 feet away. And your resident's supposed to wear a mask and your family is supposed to wear a mask, but there's nothing in the guidelines of COVID tests.
When did that change? Okay, I'll look
You know what,
at it.
it kind of quietly changed January 5th or something like that.
Wow,
And they weren't good about putting it on the portal. We asked them to put stuff on the portal when stuff has changed, and CDPHE has neglected to do that. They just kind of slide it in there, and you better be paying attention.
wow, okay.
Janet,
I'll
where
go
is
back
that
and look.
written?
You know what? It's in the last, I can forward it to Vern. I'll find it on my computer and I can forward it to him. It was very sneaky the way they put it out, but it actually said visitation indoors is now mandatory. And it was very sneaky the way that it was put out there, but I can send it to Vern when I can find it. I'll have to find it on my computer.
Okay,
Because I
great,
was
thanks.
just on the health meeting with Mesa County,
Mhm.
and they talked about that, saying, and they still made a comment about if it has 4 walls and a roof, it is indoors and you cannot do indoor visits. That's what they just said. That was last.
Where's your county numbers at? Because if your county numbers are less than 10%, then you're supposed to, it's mandatory inside visits. So I
Okay.
don't know, is your home, what county is your home in?
Oh, Grand Junction or Mesa County.
Okay,
Um,
we'll have to look you up. Yeah, if
we're-
you're over
we're-
10%, it's outdoor.
in-
If it's under 10, it's
We're
inside.
we're in the yellow now. We just got to yellow, but I'll look. Yeah, I think it was 9.8% or something like that.
You're close then, you're close, because it has to be under 10% and then it's mandatory indoor.
Okay, I'm gonna look into it.
You're
Thank
the
you.
best, Janet. Thanks for staying on
Okay,
top of
Janet,
it.
I
You're
have another question is, that, are we still doing, those of us that got our second vaccines? Are we still doing the tests 2 times a week?
That is the most ridiculous thing, but yes, you are mandated to do once a week testing through Mako. And it's not a very good site. It's difficult to do, but we are still
Mhm.
mandated to do once a week testing on staff.
Yeah,
On staff only, because some of their clients, the residents are really reluctant and they don't want to push stuff into their nose. And they're really, really reluctant, and like we're having struggles.
if,
Yeah,
You know what?
you have to do it with your staff, but if there's a resident that actually walks out and goes out to dinner with their family, you have to do it on them too.
Yeah, my residents don't come and go. So if your residents come and go, you're supposed to be doing it on them too,
Okay.
yeah,
which is ridiculous because the vaccine protects your residents 14 days after the second vaccine, they're 95% protected. But that doesn't mean they have a 5% chance of getting it. They have a 5% chance of getting it if they're in a room with infected people. If they're in a room with other people that are vaccinated, their chance of getting it is very low.
And I've also heard that people that are vaccinated that can test positive. And I don't know if that's true.
so here's my theory on that. You're breathing air, you've been vaccinated, you're breathing air, you get the virus in your nose, it's the germ. You do not have it until it gets into your bloodstream and you become infected. But if you do a test, it's on the Q-tip, you now are positive. And that to me, that's a crock. It needs to be, I'm sorry. It
It is.
yeah, once you've had if you're not feeling it, you can't tell me that, oh, you just don't have the symptoms, but you're still, yeah, I agree.
It is ridiculous.
Now, I know the whole nation hasn't got the vaccine, but our homes have it,
Right.
pretty much, don't we?
Yes.
And my employees most of my employees said no to it. And it's like, at this point, I don't care anymore. My residents are protected. If you get sick, you're not coming in. You lose your,
Right. Exactly.
so, well, thank you.
Does anybody, you want me to get you the indoor visits, Wendell?
I've got it. I know where it's at. I'm just gonna pull up a new one on it and see it. And I might call my county health lady and ask her about it.
Yeah, see if you're
more.
over 10%. If you're over 10%, it's outside. If you're under 10%, you're inside.
Okay, that's good to know. Thank you.
So Adams County is still regarded as the red flag, I guess.
Okay,
right.
well, thank you.
Thank you all. We'll see you next month.
Okay.
Bye-bye.